Good morning. I'm Peter Milios from the Finance News Network. Stocks were down on Tuesday as traders assessed the latest Federal Reserve meeting minutes, where officials gave no indication of interest rate cuts. The Federal Reserve has expressed the need for a restrictive monetary policy due to concerns about stubborn or rising inflation, keeping the benchmark interest rate unchanged at 5.25% to 5.5% during their October meeting. Fed funds futures indicate widespread expectations of no change in the Federal Open Market Committee's policy at its upcoming December meeting, with potential rate cuts anticipated starting in May. Meanwhile, high interest rates have had a negative impact on the housing market, with October's existing home sales falling to 3.79 million units, the slowest pace since August 2010 and a 14.6% decrease from the previous year. However, investor optimism seems to have lifted as approximately $23 billion flowed into equities funds last week, contributing to one of the highest totals in 2023, though slightly below the peak earlier in the year. This surge has reversed the recent trend of average net outflows, with a trailing 4-week moving average of around $5 billion. Overall, the Dow Jones Industrial Average slipped 0.18%, the S&P 500 dipped 0.2%, while the Nasdaq Composite fell 0.59%. Both the broad market benchmark and the tech-heavy Nasdaq snapped a string of 5 consecutive winning days. Lowe's declined 3.12% after reducing its full-year sales outlook. Clothing retail American Eagle tumbled nearly 16% after weaker-than-expected operating income guidance for the full year. Meanwhile, e-commerce giant Amazon shed 1.53% after CNBC's David Faber reported, citing sources, that former CEO Jeff Bezos may be selling more shares. The billionaire offloaded 1.67 million shares last week. Traders will also turn to earnings from Nvidia and HP. Nvidia shares hit an all-time high on Monday, but dipped 0.92% on Tuesday. Turning to US sectors, most closed lower overnight. Health was the best performer, whilst tech was the worst performer. Shifting to the Chinese markets, despite Beijing's efforts to boost confidence, over $25 billion worth of shares have been dumped by global investors into Chinese stock market, marking the departure of more than 3/4 of foreign capital that flowed in during the first 7 months of the year. This selling trend is poised to result in the lowest annual net purchases by offshore investors since 2015, when the Stock Connect program linking Hong Kong and mainland China markets was initiated. Looking ahead to the Australian landscape, the SPI futures are pointing to a 0.1% fall. Thank you for listening.